This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pashurtadis. Thanks for joining us at XM.com. The U.S. economic outlook continued to brighten after retail sales surged almost 10% in March, and jobless claims declined to a new post-pandemic low last week. The stellar data indicate America's recovery is racing ahead of its rivals as the flood of stimulus is boosting consumption, while the speedy vaccine rollout is shoring up confidence and allowing businesses to reopen. However, this narrative is nothing new, and now that the actual data is matching the expectations that investors had been steadily pricing into the markets since the start of the year, there's been a bit of unwinding of those moves in April. Treasury yields plunged on Thursday after the robust data, with a 10-year yield falling to one-month lows. It seems that the strong numbers didn't materially change the outlook that's already baked in, and after the sharp first-quarter sell-off, investors have been snapping up treasuries in April. Ultimately, though, the reversal in yields is being driven by the Fed's commitment to maintain ultra-loose policy until the labor market is close to a full recovery. The U.S. dollar followed yields lower on Thursday and has stabilized today. Its index against a basket of currencies is on track for a second straight week of losses as the yen firms below the 109 level and the euro scales a 6-week high. In commodities, the safe haven gold joined risk assets in powering higher, hitting a 7-week high on Thursday. Apart from the slump in Treasury yields and the dollar, a worrying deterioration in U.S.-Russia relations could be attracting some additional flows in the precious metals direction. The mood in equity markets was distinctly more positive, however, as traders were inundated by eye-popping Chinese GDP figures hours after the flurry of upbeat U.S. releases. China's economy grew by a record 18.3% year-on-year in the first quarter, but the quarterly fell well short of expectations, casting doubt about China's recovery going forward. Nevertheless, most Asian stock indices closed higher today, and several European bourses opened in uncharted territory following another record-setting session on Wall Street on Thursday. The Dow Jones and S&P 500 both closed at a new all-time high, as the earnings season has so far gotten off to a very strong start. This was today's Daily Market Comment. Thanks for joining us at XM.com.